Koushik Chatterjee from Tata Steel joining in the phone line. Koushik, hi, good afternoon. Can you hear me clearly?
Yeah, Aisha, good afternoon.
Good afternoon. Okay, firstly, the obvious question, the rationale behind divesting this majority stake in Southeast Asia business.
So, Aisha, this has been part of our larger portfolio exercise. We've recently closed the sale of our 26% in TRL Koushik, which is also a partnership in India in December that we raised about 300 crores. This is part of the simplification of the portfolio and focusing on the India core growth story. And I would say Southeast Asia is also in the same line as what we are doing in Europe, where we have got into a joint venture which is underway with ThyssenKrupp. Similarly, with Heavy, we are working as a partnership, and perhaps we can do more with them. As you know, they are a second largest Chinese steel company, and with almost about 46 million tons of production. So these are, part of the larger strategy to focus on India on our own largely, and looking at partnership to make a more sustainable portfolio overseas.
Okay. Hi, Mr. Chatterjee. This is Mubina as well joining into the conversation. Congratulations. This has been something that has been in the works for some time now. At least the buzz was very strong. Rumor mills were a buzz about you divesting a part of your stake in the Southeast Asian business. I want to just talk about some numbers and valuations. If I'm not mistaken, you're going to be getting $327 million and a 30% stake in HBIS, in the entity, in the group entity. What does that put the valuation for the Southeast Asian business at? And would you say it's more or less in line with what steel companies in general are trading at this point? Are being valued at, rather. Let me put it that way.
So I think, as I mentioned in the call, the enterprise valuation of this business taken on a combined basis would be north of 600 million. And the equity valuation would be in the region of 470 million odd. So our stake, the value that we'll get out of the 70% divestment will be roughly about 327 to 330 million, subject to closing adjustments. So that's broadly the valuation number. Obviously, there will be some changes as we go on the closing side. But I think that based on this current valuation, we're happy at it, and I think from a book value perspective, it's higher than the book. So that also vindicates the fact that we have a good business to partner with Heavy.
Okay, yeah, no doubt. Valuation certainly, I think everyone on the street is pretty happy. And yeah, like you said, I think drawing parallels with what you're doing in the European business as well. But talking about specifically the Southeast Asian business, I want to understand that for this holding entity now, with 70% being held by HBIS, what is HBIS going to be bringing on the table, and what will Tata Steel be bringing on the table? I'm talking about perhaps some technological advancements in steel making, scale in operations, perhaps a way to push up the EBITDA per ton for the Southeast Asian business. What will the two parties be bringing on the table?
So as far as Tata Steel is concerned, we certainly bring in the knowledge of operating in that geography, and our customer connects the channels that we have in Southeast Asia, and we've been doing it since 2005 for both Thailand and Singapore and Vietnam and other geographies. And I think we will also have part in the governance, as we have two nominees on the board, and we will have our nominee as the deputy CEO and the deputy CFO of the company. So that's what we bring in as far as the ongoing incumbent business is concerned. Apart from the Heavy, I'm sure we'll have to look at a lot of synergies between its own operations in China, its own ambition in Southeast Asia. They are building a new steel plant in Philippines, so I'm sure there will be a lot of synergies around that. And from a technology, operating excellence point of view, I'm sure we'll both work together. As I think that's the complementarity in the operating values that we have. Both companies are focused on high degree of operating excellence, and we will bring both capabilities to the table.
Now if we look at Tata Steel from a group perspective, essentially now there are two parts. One where you're going to be focusing on growth and building up the business, that's the India business. And then the other is making those structural changes to ensure sustainable growth. That has happened in Europe, and now it's almost going to be happening in the Southeast Asian business as well. So with that, is the structural changes in the holding of your different business portfolios, is that complete, or could we still be looking at some sort of monetization in any other asset that you may be owning across the globe?
So I think these were two big pieces in our international portfolio, and I think these are the two important ones too, because these markets are important, both the European markets from the kind of high value products that European customers demand, and the kind of technology that is required, and that's largely in the flat products business. The Southeast Asia portfolio that we have, which we are putting into this partnership, is the long products portfolio. And Southeast Asia is also one of the large blocks of consumption for the future. So